Everyone, Double P here and welcome. So in today's trading session, I attacked Microsoft, attacked the 337.50 strike call. So you can see it right here. Here's the option on this side right here. Here we are on the 5-minute and on the 2-minute. So what do we always do when we're looking to take our positions? Well, we look at where the box is. Right here's the box, right? Here's the box right here, right? If the position opens up above the box, slightly above the box, we want to wait for a breakout or a breakdown, but 9 times out of 10, 96% of the time, we are going to take a long position, right? So you see right here, I drew my channel, right? This is an algorithmic channel. So I'm just watching what the algorithms are doing. Where does Microsoft open up? This is an inverted hammer right here. So let me come over here. Let me draw this section here so that you see it a little bit better. So we'll focus on this area right here. What is this right here? This is even though it's sell side activity, this is a bullish inverted hammer, even though it's sell side, closed in the red, because you got this right here, right? 3 candles, you got 6 minutes of consolidation, and then this is one white soldier here, which is a hammer. Sorry, this is a hammer right here, bullish off the reversal. This is another inverted hammer, and then you get that rip right here, right? So I'm waiting. I didn't come in here and take my trade until right here. I kind of missed that whole entire move because I was watching Tesla, I was watching Apple, I was watching NVIDIA, and they all did the same thing. They opened up, a lot of consolidation, back and forth, inside the box, outside the box. It was just, I missed this move on Microsoft. I had my eye set on Microsoft anyways to get in and get out. So just so that you see it here, there's Microsoft. There's NVIDIA. And I was just like sitting here and I was like, man, I really want to take NVIDIA. But as you can see here, NVIDIA just chopping back and forth inside of that box. The box is the no trade zone. This is a no trade zone. I mean, you can take a trade if you want in there. So if you want to be like market neutral, then what you want to do is you want to do a spread, right? Or you want to do like a debit spread, credit spread, but I tend to avoid this because this is just chop. This is consolidation. This is taking a neutral position, and a neutral position in a market like this, where it's constantly, it's edging its way up higher. I don't want to be in a neutral position. I'm a directional trader. I work on momentum, direction, volatility, price action. So I want to see that in my trade because that's where the movement is. If I wanted to be a neutral trader or a market neutral trader, then I would do spreads and I would just sit there and walk away. And, that's a 50-50 kind of game right there, being market neutral. Because if you're selling premium, I got to sell premium 45 days out. I got to sell premium 90 days out, right? I don't want to be doing that. I don't want to have a position for 45 days or 90 days. I want to be in and out of the market before the end of the bell. I kind of want to be in and out of the market within about an hour, hour and a half. I want to be done. I don't care what happens the rest of the day, right? So this is no trade zone. So that was NVIDIA. That's why I don't take it, right? But then you can see NVIDIA finally kind of broke out. little bit of a breakout after all that consolidation, and that was that. Tesla, same thing, right? I'm looking at it and I'm like, I really do want to take Tesla. And probably Tesla would have been a nicer trade. It was a grindy type trade. You can see it right here. So, but I stuck with Microsoft. So I missed a good portion of that move. Neither here nor there. And I probably still could have stayed in this trade with Microsoft anyways. But I don't violate my rules. So when I drew that channel, once it broke outside that channel right there, algorithms broke outside that channel, you know what I mean? There's a move here that's, to the downside. So that's 6 minutes right there of sell side activity that I just not prepared to take. And then right here, after the sell side, right? All of these here are gravity points, by the way. There's a gravity point, that's the low, that's the high of the day, that's the low of the day. Right, so look at the move right here, what it did. So I'm looking at it, and then it comes right back on. This is a good range right here. This is a $1.04 range on this candle, which is pretty good because it was an explosive move, and then Microsoft popped. So you see it here off this explosive move, pop, pop, pop. Then we got a lot of consolidation, grinding back and forth, till eventually it popped out and hit the high over here. The high was right here. So let me point out the highs to you. The high was at 336.84. Then the next high was 337.19. And then the next high, excuse me. Triple. All right, and then that high over here is 337.48, and then 337.66. So, but no channel. This is, so let me come over here. Let me draw the box for you. That's consolidation. That's high level consolidation. So had I got back into this trade, right, off of that retracement, had I got back in there, let me draw the price here, retracement off of the high. So those two right there, let me open this up here for you. So those two right there, price levels, that's my support. That's my second line of support. This is my third line of support. So here's support, vertical support. This is horizontal support. So, I mean, I don't want to chop back and forth. I don't want to sit there and chop back and forth. What is this? That's 2, 4, 6, 8, 10, 12, 14, 16, 18, Let's come over here to the 5 minute. That's, what is that? 5, 10, 15, 20, 25, 30. That's 40 minutes of algorithm chopping back and forth. That's how you get carped alive if you're trying to sit in there on this trade, because your option is just like, it's just ping, 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 ping. It's bouncing up and down. It's all over the place. You got end of the day option. This is the end of the day option, right? Expires today. You got massive theta decay burning away. You know what I mean? Look at where are we here. Let's see when this starts. We got 10 o'clock right there. That's a lot of chop, right? From 10 o'clock to 10:33, that's a whole bunch of chop. That's a whole side of sell side activity right there. Like that's why the option now is like 48 cents, right? It was at a high 134, now it's 44 cents. 50 cents. Tons of theta decay on that. Tons of burn, right? So that's why I don't want to sit in there. That's why I got out where I got out, right? So for those of you in the Platinum X Power Option Trader, remember you gotta look at this now and say to yourself, this is why I send out the trades. So that's why I send out the trade to you. You know you got it. 337.50 strike call, 84 cents, right? Now, obviously, I took a bigger position, but this is what I'm telling you to get based on what's going on today. Take it small, get a good profit percentage, and get out. Minus 15% stop loss, right? And get out, right? And then there's my sell alert right there, my text alert to close out my trade. 337.50 plus 25.30% profit. That's what I'm looking for, right? I get in and I get out. I took a big position today. So there's my position, 25.3% profit, $3,800. How long did it take me to make that? A few minutes, right? Based on this volatility, based on what was going on. I was out. I always tell you guys to get out on the high, right? If you're going to do the type of trading that we do, that I teach you here, you always want to get out at the high, right? Or get in on the low, get in on the reversal so that you can ride that wave up. Or if it's continued to be a downtrend as you're getting in on the low, you obviously don't want to short into a hole, but then you have to look at what the algorithms are doing. If the algorithms are selling hard and the slope to the downside is hard, then the algorithms are on your side. It's okay for you to short into that hole because the algorithms are defending you. The algorithms are actually carving the way for you to continue to go lower. So that's what you want to do. Give me a second here. So the algorithms are dynamically selling into the selling. So it's okay for you to ride that wave down. Same thing on the upside. Algorithms buy into strength and they sell into weakness. So when they're buying into strength and you see the channel right there that they're trading in, that's okay for you to get in there because the algorithms, again, will defend you. They're carving their way to the upside. So you want to sit in that trade and piggyback off the algorithms and wait till they break that channel, that slope, right? So the sideways consolidation, I'm not down with that. I get out on the high right here. Boom, I'm done, right? And this can chop back and forth all the way. For all I care, I don't care. And then look at what happens right here, right? You see the movement right here. You get carped alive doing this kind of stuff, right? Staying in that trade. Because now, look at that movement right there. 1033 to 1050, you know what I mean? You just lost a bunch of money if you're still staying in this trade, right? Well, there's the option right there, it's telling you. So I don't choose to stay in there. So that's why I drew that. If you're wondering where all these other lines are, these are all pivot points. Pivot point, pivot point, pivot point. I could remove this. So let me remove all this. Just keep in mind what you see there. I'm going to remove everything. And I'm going to put in pivot points. This is algorithm. I'm just following the algorithm. Okay, where's my pivot points? 2 day. So here's the pivot points. Let me clear the drawing set so that you can see the pivot points. Keep in mind, those are the points that I drew earlier on. So where did Microsoft touch? Right? Here's the main pivot. This is resistance, resistance, resistance 1, resistance 2. Right? So you see, this is all algorithmic, right? This is where algorithms touch. These are called gravity points, pivot points. These are where algorithms will levitate to, either on resistance, on support. You've seen how I drew out all my lines. I just drew out the pivot points, and I got rid of the pivot points and put in the price action so I see what the price action is, because that's how I like doing it. But I could have just left it at the pivot points and traded around the pivot points. All right, so let's draw this. Let's draw this channel. Still the same thing. Right? It doesn't matter how you chop it up. It's the same thing. Right? Here's your support. If you're going on the wick, so when you're drawing out your support and your resistance, you can draw it on the wicks or you can draw it on the body of the candle. So you can draw it on the top of the shoulder to the bottom of the boot, right? What do I mean by that? So let's take this candle right here. This is the top of the shoulder, right there. That's the bottom of the boot, right? That's how I look at the candles, right? Everyone has a different methodology for looking at the candles. I just like looking at it like that. That's the head, that's the top of the shoulder, that's the bottom of the boot. All the candles, right? There's your wick. There's your wick, right? That's the top end, that's the bottom end, that's the body of the candle, right? That's the high, that's the low, that's the range on the bottom end, that's the range on the high end. That's how I look at all the candles, right? And I just say this is the top of the shoulder, that's the bottom of the boot. Whatever. Right? I don't mean whatever to be cavalier. I'm just letting you know that everyone tries to complicate. People try to complicate trading, and trading is not complicated. So once you understand how to read candles, and you keep it very simple. I keep this deadly simple because I'm not a really smart guy. So I mean, I'm smart, but I don't want to be overly smart. You know what I'm saying? So I want to keep trading stupid and simple. You know, because at the end of the day, that's what it is. Keep it stupid and simple, right? So, I mean, if you wanted to draw out support and resistance, okay, let's draw out support and resistance. You can take it either from the body. So there's a lot of ranges right here. So let me get out my trusty pen right here. So you got a tap, you got a support level right here. That's the body of the candle. That's the body of the close, body of the close, the body of the open, the close, the open, right? You got the range right there. You got the close. You got the open. You see it right here in the channel. You got the range at the bottom end. You got the open. You got the range at the bottom end. This is clearly support. 335.69, right? That's a gravity point that the position is going to go after, right? It's going to levitate to up and down, support and resistance, right? Right now, it's a firm line of support, right? It tapped through it. How many times did it tap through with the wick? 1, 2, 3, 4, 5, until it finally broke through 6, right? But now, where is it now? It's coming right back to that support. Now, this is resistance, right? Now it's coming right back up to resistance. So it's either going to now trade around that range, right? Or it's going to try to break through. Can we draw another channel? We could draw another channel. That would be tight. This would be a tight channel right here to draw one. So I can draw it from the wick or I can draw it from the body. Either way doesn't matter, right? Where would I draw that channel? I could draw it there, but that's too wide. I'm going to draw it. This is art and science when you're drawing channels. I'm going to draw it right there because that's the more precise channel right there. And that is a more precise channel. So let me get rid of that. Let me remove that channel so I don't confuse you guys. So there's your channel. Now, see what did it just do? It just rammed through it in real time. See that range right there? What was that range? 83 cents. Right? And here we go back up here. So outside of that channel, outside of support and resistance, broke right through it. So if you're wondering, well, where's the next line of defense? Where's the next price level it's gonna get to? Well, you look at the candles, right? Where is it heading to? Sorry there, I was still on the channel tool. That's why it bounced like that. So let me draw it right here, like where I was going to originally draw it. So 336.91. Right? So that's your next line. That's your next resistance point because you can see it right here where it chopped through, touched it right here. So we got 1, we got 2, 3, 4, 5, right? I'm looking at the closes, the opens, I'm looking at where that point is, and then this is the box right here around this area. So let me get the box out here. This is a cluster. So watch. Watch so you see what happens here. See that? So you got 336.91. Then you got the volatility box. You got the price action. You got support and resistance, and you got volume right inside of this volatility box right here. So you see where Microsoft is right now, where it's aiming to break into this box now, because this is just all cluster right there. See, that's all cluster. That's all consolidation. That's what I consider it's a traffic jam, right? That's how you get carped up, carped alive because of this right here. You either want to wait because it touched a high over here. It touched a high, it hit a high. How many times here? Let me get out my trusty pen here. So right here, tapped it there 2, 3, 4 times, 5 times, and then failure, right? So you see Microsoft slowly working its way. Let's open that up so you can see it. You see Microsoft slowly working its way through in that box, in that zone. So this is overhead supply. This is a lot of overhead supply. And Microsoft now, where the price action has got to push through all that overhead supply. So 336.91 is resistance, right? There's a lot of overhead supply. Let's go look. Let me add the volume profile. I'll get rid of pivot points because we don't need pivot points anymore. Automatic chart. Just want to make sure. Let's leave it on chart for the day. I could change it for the minute or the hour, but I'm going to leave it on just chart. So right here, this is the point of control. This is where the institutions, this is where the hedge funds are looking at right now. What do we do here? Do we unload, risk off, or we load up, risk on, right? They have to figure out what they want to do. There's your liquidity zone at the very top. Tons of liquidity up here, right? This is overhead supply, as I told you before, right? This overhead supply. This is the top end of the liquidity channel, right? This is the value. This is the high value right here. That's the low value right there. And you have to look at the top end. The liquidity is very dry up here, right? That's the high, right? You see it right there. Lot of supply right here. So it's got to push through all of that to try to break through. So for those of you in the Platinum X Power Option Trader member group, so you guys are watching this is how I do my end of the day recaps. And I'm also giving you a tutorial on what I see on a day like today, what's going on, right? How I'm looking at, would I get back into this position? No. Why wouldn't I get back into this position? Because I'm explaining to you, and I'm showing you on a chart, I'm showing you on a 2 minute and a 5 minute why I wouldn't get back into this trade. Because I don't want to get carped. This is how you're going to get carped. If anything, what I would do is I would look at taking a put, on a position like this right here, but I wouldn't do it because of these ranges. Let me remove that drawn. If anything, I would look at right at the point of control. So I would look at this position right here off of this big movement right here. I would look for, okay, if it crosses, this point, I would look at taking a put. I'd be looking at going on the downside, but Microsoft is up $5 today. Where is the expected move? Is $2.50. It's already blown through the expected move. $5. It's already gone through it. Where's the option sitting now? negative 77%. I wouldn't touch it. I wouldn't look at taking any position now, because theta K is just chewing. This is 94%, minus 94%. I wouldn't even look at taking a position here. I'd be done with Microsoft. And it's moving too slow anyways. Like, the volatility is just being sucked out of this. The volatility is being sucked out of the day today. So why would I want to take a position and get carped alive, get burned on theta? I already made my money, right? You have to be disciplined. You have to be a disciplined trader. You don't want to be taking multiple trades. You want to be taking 1 or 2 trades a day, high value trades, high probability trades, high profitability trades based on the law of analytics, the law of probabilities. You get in, get out, make your money, and that's it. Sit and watch it if you want for the next hour or two. But right now, as I'm looking at everything, I'm looking at the volume profile. I know, and based on a resistance, support and resistance, based on pivot points, based on price action, we're going to be bouncing around here, right? Because this is where liquidity is. So I just say to myself, yeah, I'm done, right? I had a good day. So that's it from Double P. Hope you enjoyed this end of the day trading recap. Once again, you see what I've gone through. You see what I do. These are lessons that I teach you guys and girls in the Platinum X Power Option Trader member group that you got to get into your brain. You got to understand. Get rid of all the noise, right? These are live, real-time training sessions for you to see how you need to set yourself up, what you need to look for, the tools that you need to employ to be able to be very profitable, how you need to use the tools. Look, this takes time. Drawing these volatility boxes takes time. Drawing the channels take time. Channels and slopes are art and science, but they're based on mathematical laws, the law of probability, the law of analytics, the law of volatility, right? So you have to understand those laws. You have to understand how to put them into play. You have to be able to look at what algorithms are doing, combine it with the candles, as you just saw me doing, right? And then put the package together. This takes time. Don't rush it. When you rush it, you make mistakes. When you rush it, you lose money. Take your time, trade calmly, trade with a level head, trade with precision, be a ninja, get in and get out. And for those of you that have been with me for a while, you know this is old hat. For those of you that are new, this is why I kind of go over these trading sessions and I give you a little bit more in-depth learning for some of the things that I need to get out there to show you what you need to look for on days where it's kind of slow, days where volatility sucked out of the marketplace, but days where the marketplace is continuing to move up, right? It's just trading back and forth. We're at the top of a range right now, right? Let me come over here. We're at the top of the range, right? I don't need to look at charts. I mean, at where I am now, the level that I'm at, you guys look at charts, right? All I need to do is look at the market internals, look at the market breadth, look at the report, look at volatility. This is all I need to see. These instruments that I have up here, this is all I need to see. This tells me exactly what's going on in the marketplace. I know where we are, right? The market is in a bullish formation. It's in an uptrend. It's in a topping formation. We're in acceleration still, acceleration and accumulation for the most part. We fired red on a couple positions. Bitcoin's up $425 today. That's ridiculous, right? So I look at gold. Gold is up. The diamonds are up. I'm looking at the Euro USD. I'm looking at oil. I'm looking at oil again. The VIX is depressed. It's crushed. The VVIX is crushed. I look at what I need to look at. You know what I mean? I look at the Nikkei. I look at the Qs. You know what I mean? I look at what's going on in China, FXI. So excuse me. I know what's going on, right? I know what's going on in the marketplace, right? Let's go take a look at Apple. See, you got your movement right here. Let me draw this out. I'm not going to draw out support and resistance. I'm just going to draw out the box. Minus the wicks. You know what I mean? That's called getting carped alive. I mean, in here, there's your takeoff, there's your blast off. Here's consolidation right here. So here's your move right here, big move. What was that? 9:30, 9:53. So we got what? 23 minutes. Algorithms. Remember what I told you. For those of you that are brand new, algorithms trade in 30 to 45 minute increments. So when they're making a move to the upside or downside, it's 30 to 45 minute increments. That's how they're trading. They're trading in those ranges. They're trading in those channels. They're trading in those slopes. 30 to 45 minutes. Then they take a break and a breather, depending on where they want to head next. You see it right here. Consolidation, back and forward. 9:55, 9:32. So what is that? 33, 35 minutes, right? Back and forth, right? Here's your next volatility box right here. 10:35 to 10:55. What do you got right there, right? And then you have your next volatility box right here, right? That's what algorithms do. If you understand and know what algorithms do, watch the course. You're inside the course. I explain to you what algorithms do. I explain to you how they trade in channels and slopes. I show you everything, right? I'm showing you right here, right? This is how you get carped alive, right? I don't want to be in this. I don't want to be in that type of a position. You know what I mean? You can scalp for 20 minutes, but really, when you think about it, what are you going to scalp? You're scalping a buck, right? What's this volatility box right here? This volatility box right here is 196, 195. You're scalping for what? 80 cents on an option with the volatility being sucked out. You get crushed. You don't want to be doing that, right? Here's your movement right there. That's where you want to get in. Draw that channel, get in there. This is consolidation. That's going to get you wiped out because you're going to be bouncing up and down. I've seen traders try to scalp back and forth with options in here, or even with stock. Same thing. You get crushed. You're going to get carped alive by the market makers. They're going to carp you alive, right? And then you have your next one right here. This would have been good right here. This box right here. That's a good downside, sell side activity. But even still, you're going to take that side, then take the reversal, move on the way up. Yeah, you could do that. What's the range there? Let's see here. I wouldn't do that either. That just takes too long, right? So I would leave that. But that's something for you to look at. That you look at that, you say to yourself, okay, from sell side activity all the way down here. So from sell side activity all the way down here to reversal all the way back up there. But you see what the algorithms are doing, all right? So Apple is very trading in a very tight range, I wouldn't be bothered with it. So I want volatility. I want something that can make some movements for me. So that's why I would wait, right? I wouldn't touch this. So hope you enjoyed this trading session. This is your end of the day trading recap. For those of you that are watching this on social, I hope you learned something today. You always learn something with double P. I always try to teach you something. Sorry about the coughing and stuff there and the sneezing. Still trying to get better. So it's a day by day kind of thing. And then there you go. So I'll see you in the next trading session. Take care, everybody.